Hey everyone, welcome to another video. We're back with an Asian session trade recap. So this was the first trading session of the week for me. I traded yesterday, which is Tuesday for me, or Wednesday if you're in Europe. I basically traded Asian session. My entry was around 4 p.m. my time, so about 2 hours after Asian session begins. And we caught 42R. We have two entries. I'm going to go ahead and break them down, what I was looking for, how I took my entries, and I have tons of screenshots and timestamps from the TradingView app that I take with updates of what I was thinking, how I managed my trade, my thought process, just to show you live, right? Because I think that's something that's very important. Obviously, I don't record my trading live all the time. It's not something that is very easy for me to do because I trade very passively, so I could be at home on the chart, I can hit my entry, and I can walk away from the charts for a little bit. So I'm not always monitoring unless, I haven't gotten an entry yet. So in this case, we're going to go through and we're going to break those down. So let's get started with this video. These are the two entries. We're going to go ahead and hide those. And we're going to start on the higher time frame. I want to break down what I was looking for, right? So obviously, in this case, I did my markups on, I believe, Sunday or Monday, right? And so I'm just keeping in mind all of the time frames available. We know this is the monthly, so the monthly has broken structure to the downside. We have one break, two, three. This is the fourth month past this previous lowest low that we have. We're making new lows that we haven't seen for so many years. It's not even available on forex.com data. So you have to use other brokers in that case. So at this point, we can see price can be continuing to run to the downside. At the same time, here for the last 1 month, which we are 19 days in October, you can see that we had this very large September candle here that runs from that low to this high. It's about 660 pips, right? So we're currently inside here, and more than likely we're going to end up having this be an inside bar closure. So we have about like 10 plus days, 10, 11 days for October to finish. It might be unlikely for the low to continue breaking this low. It also might be unlikely for the high to surpass and take out this high after this break. So very likely this month could be an inside bar closure. So I'm just keeping that in mind, right? So then we go ahead to the weekly time frame. So here we can go ahead and change up our monthly to weekly. You can see that this was where the weekly candle, we had a reaction to this demand zone, almost like it wicks a little bit below, it might have, and then we commit and break to the downside. So I'm going to go ahead and show you, this is my weekly markups. So I'm just coming up with basically understanding this is the first basically weekly change of character where we break structure, shifting bearish, right? And this is basically every range. Here we have a buy engulfing demand candle. We have a range that develops here for 1, 2, 3 weeks before we commit and break to the downside, pushing price much lower. Here we make a low. This low gets broken by a body, so we create a new swing. Price makes this low, pulls back. Here we break to the downside. Here we break on wick, so we need that wick to be broken by another body. Here we break that with one wick with another wick, so then we need to see a body close here. We actually get that closure here. So what I then did was I took the high and the low of this swing internally, right? Technically speaking, from this high to this low is the swing, because this didn't commit to break. We had the commitment to break it from this high to this low. So this is a swing I'm looking at from that high to this low. Basically what we were seeing is this is where the 50% is. So if price was going to pull back, we could see price pull back from premium pricing, which would be the 50%. We could also see price continue a little bit higher, but more than likely you will see a very strong reaction from the equilibrium of that swing. So that's usually what I'm looking for. Then we head to the daily time frame, and here we can pop up our actual daily markups. Here we can hide our weekly, right? So here we can see on the daily time frame, if we look to the left, here we had relatively equal highs. Price took liquidity and then broke to the downside. This is the decisional that ended up being responsible for breaking out of this range and committing to break structure to the downside. Price came up, tapped into that supply. Here you can see that we have some relatively equal highs here. We have this wick high that failed to break the low. Then we have this one that took the low. So this is structural, and this one was just a very strong wick that could be inducement for this POI. Price came in tapped, engulfing to the downside. So now we have a buy to sell engulfing. This did not directly break structure. What did break structure is here. So inside of this range, we take the lows, we take the high, and then price commits to that break to the downside. So while this is the extreme that took liquidity, a lot of times when we have relatively equal highs and we sweep those, a lot of times what ends up happening is the flip is where we have that commitment and that interaction, and this is usually what gets mitigated on the higher time frame specifically. In this case, that's where price came into, and you can see the price shifted bearish at this point. So now what we have is a couple things. We have this high and this low. This low has failed to break this high. So what that tells me is that technically speaking, this low is considered weak. Price did pull back, gave a reaction, and so now what we're trading is between this high and this low. And so technically speaking, I could look for a couple things. Either this low was going to propel price to sweep this high, come back and tap into this daily supply, or price was going to come back into what? Premium pricing, and then more than likely sell off, because we're already seeing a sign of weakness. So price comes in, this is the EQ, this would be the buy to sell that's engulfing outside of the inside bar. So this is the inside bar, this is what broke out from the inside bar, committed to breaking the range. So just keeping that in mind. We have liquidity, we have inducement here, and then we have this weak low that can also be easily taken. We go to the 4-hour time frame. So let's look at the 4-hour time frame. You can see here, if we go back and forth, you can kind of see what we're looking at. So now we hide the daily. So here now what we can look at is what is the 4-hour order flow and what are we expecting to happen. So at this current moment, what we can see is that price was bullish, came in, failed to tap this zone, right? What we basically did is, if you can see in here, we filled that imbalance. And a lot of times lately I've been seeing that there's a very small imbalance that usually gets filled here. Usually I'll use like a green color for something like that. Let's fill this in. Let's do it like this, and then right here. Alright, so that's the imbalance. You can see that price came in to tap that imbalance, so it filled that in, and it did not tap the actual POI in itself. So in that case, we could think of a couple things. Either that could be inducement for the POI above, right? Or this could be enough to satisfy the move. So instead what we look for here is what reaction was generated from this zone, right? Because it is in premium pricing of this high to low swing, right? So here you can see this is where an order flow shifted bullish. So this is the extreme demand on the 4-hour of this 4-hour structure. Technically speaking, right, this is not mitigated. We have an imbalance above. This committed to break of structure. So this could be strong. Now at the same time, it's counter trend to the daily, weekly, monthly bias. So it's not necessarily something we expect to hold, but it's just keeping in mind that this is an unmitigated extreme. Now it has failed to break to the upside, but it has internally shifted price bullish. So we could see price come in to tap this zone, sweep this as inducement, and we could get maybe something like this. Doesn't mean it has to continue higher, but it might generate a pullback before it fails. You never know, right? So anyways, this was the last sell to buy. You can see how impulsive this leg to the upside was. We have, after the sweep, we have 1, 2, 3, 4 candles on the 4 hours, so 16 hours of bullish price action. Price then 1, 2, for 3 candles, we have 12 hours of price hesitating. We get a sweep of the highs internally, and then that's when price commits bearish. Now here, what we have is a flip. So here we have this, this is where the price swept and decided to commit to buys. So this is a reaction point that we could see. Now I don't have it marked out just because in general I know what it is, so I don't need to add more markups to it. But we did generate a reaction. We take some internal range liquidity here. Price makes these perfectly equal highs on the 4 hour before melting and selling off to the downside. So now what we could look at this is a couple different ways, right? Now this low failed to make a new high. So typically, right, what do we have? We have, in this case, a higher high than the previous. Then this low is higher than the previous one. So this is a higher low. We make a higher high. We expect a higher low. This pulls back into the range, taps a valid POI. The expectation is that this would then push price to make a higher high. Because we had that failure of that expectation, what we then have is a flip, right, that takes liquidity in this case, generated a pretty good reaction before failing. So this is an internal change of character. I do not consider it an official change of character, but I do consider it a supply range where commitment was generated to break to the downside. So in this case, the extreme is going to be more valid to me, but at the same time I understand that there's probably more orders and time spent inside of this range here than there is at the top. And there's not necessarily a need because the extreme actually failed to be the cause of a break or a change of character. Here you can see we swept liquidity, we pushed to the downside, but we still generated a good enough reaction from this demand to the left. And this is where we actually have that strong commitment, plus we left behind that imbalance. So more than likely, this is where we can get that reaction. Now, in this case, what would be the POI that we're looking for? For example, I could say I could focus on this is the 4 hour that got engulfed, the first one, right? But at the same time, that's very refined. So what I usually do is I will focus on the, let's say in this case, the buy to sell, so the buying side. So in this case, I see that we made a pause, we get a reaction to the supply in that wick. Here's where we engulfed to the upside, we paused, and then that's when price melted. Here you can see we took that low with that small wick. Price then creates a buy to sell. Here we have another reaction to this extreme here, and then price decides to engulf and commit. So it didn't actually tap the PO. Now if I would have adjusted it to this one, to that wick that actually takes that low, we can go ahead and see the difference here. Let's mark it out like this. So this would be that low that I drew mine from. You can see that that pierces it a little bit lower. So for example, here now you can see that we did actually give that small tap to that supply, right? And usually I'm looking for a deeper mitigation into a POI, but if price generates the entry model that I'm looking for, then I'm going to take that. So understanding that this is a strong 4 hour supply that I'm looking for, you can see that after this created that push to the downside, and we didn't have any pullbacks that created anything reasonable to pull back into the supply. So usually what we're looking for is every time we have a break, a pullback into the range to generate that mitigation, even if it's a somewhat of a mitigation, and price later comes back to continue and sweep that. But if price is very impulsive like this and it doesn't generate that mitigation, a lot of times what we find is price will take a while to actually come back to that zone. So in this case, this is what this would look like. So we did this would be the flip, and then price does this. And so price never came back to mitigate that range. And so what usually will happen is price will come back eventually, which it did here, just to give that last tap before continuing to the downside. So in my mind, this is where we have order flow then shifting bullish again internally. So this high makes this low, it gets taken by wick, right? Then we have this high, we pull back, we make a new high, we break on body, so this is strong. We have a clean 4 hour demand here. Now it doesn't have any inducement, so I mark this in green because I'm expecting a reaction, but I'm not expecting it to hold, right? It's also a counter trend to the daily and to the weekly and the monthly bias. So I'm not expecting a strong reaction. More than anything, it could be liquidated, but at the very minimum, I expect a tap of this zone. So you can see that this 4 hour, very impulsive to the upside. And because these are 4 hours, you spent 1, 2, 3, 4, 5, 6, 7, 8 times 4. That's a pretty long time that we spent in this zone. And so we did give that small tap. You can kind of see the price is hesitating, so more than likely we can expect some sort of pullback. Now another thing that I was looking at when I was on the charts, I was looking at the 1 hour time frame. And here on the 1 hour time frame, you can see price is very wicky, sweeping both bottoms and the tops. Price action was pretty messy. So in this case, I was looking for, at the minimum, price to take some of these lows in here. So I'm actually going to go ahead and show you now my markups on the 15-minute time frame. These were done just before the session started. So for example, how I like to start usually is, in this case, I refined my 4 hour. Here you can see very much that this was very impulsive price action, left behind a lot of imbalance. This was the origin of that swing that broke structure. So in this case, this is the 15-minute refinement of the 4 hour. When I'm looking here at the 15-minute time frame, I want to know, even if price misses my POI, what happens? What's the order flow indicating in this case? So what we can go ahead and start with is we're going to mark the highs and the lows. So for example, here we make this high, price is kind of ranging in here, we take that low, right? So this high pushes and makes an internal low, right? Then what we have is this high, we have this low, and this low takes that high. So then from this low, we make this high, we pull back a little bit. Doesn't really pull back low enough into well-priced territory, so I'm not really considering it part of a swing in this case. Price makes this high. So now we have this high, and we have this low. Price then pushes down. Here we can see price is wicking around and messing around, taps that extreme, and we take that low. So now from this high, we can say that this high is strong, and it took that low. So in this case, for me, I can say a couple things. Okay, well, one perspective of this is if the 4-hour order flow is bullish, and maybe this is just going to create liquidity for the POI above, what we've just done is we've created a sweep. So we had a range, which you can see right here. Price kind of makes that low, takes the highs. You can see price is then very corrective on the push down. And then now we've swept a sweep. And then what do? This high takes the previous. So now what we've done is we've created a strong low that broke and took that strong high, because that high also took the low. So in that case, then what I'm expecting is price is probably going to mitigate this level and continue higher. Now, that's kind of what happens, right? So price comes back to this extreme on the 15-minute, right? And it does so pretty quickly, very aggressively. And then here's the expectation. It should create a new high. So there's a couple things that we can do here. Now, this is, in a way, you're kind of looking ahead of time from what something actually happens. So in this case, the 15-minute took the high. So that's a bullish order flow. So the expectation is a continuation. You would want to take along from here to target that high. Now here's the thing. A lot of times what happens if price fails? If it fails, it's going to be at the extreme. So if you did take a buy in this demand and you were targeting this high, what happens when price comes just above to these levels and then switches directions? That happens pretty often. So in that case, because I noticed that this high was taken by this wick, and this wick failed to close above, and what we had is a wick closure, a sweep, and a very impulsive correction to the downside. You can see how strong this pushing down to the downside was, and we tapped this demand. My expectation is, because this did not close with strength and it did not break the high in a clean way like I like to see, then what I was expecting is, well, there's very likely that the extreme can end up failing, right? And so you can see very corrective price action happening here. If we turn on Asian session, this was my trade during Asian session. And one thing that I like to kind of share is whenever I trade Asian session, I'm very aware of where price is when market opens for Asia. So the way I like to think about things is Asian session is very low volume, and it's very easy to manipulate and push the market around during those times. So the way that I see it is that Asian session still wants to get the best price possible. So if we are in a premium pricing of a swing, counter trend or pro trend, it doesn't matter. But if we are in the high, let's say if we're in the premium pricing of the swing, Asian session upon open will begin looking to take price to discount territory. Now, if we are in discount territory, whether the price is pro trend bullish or not, a lot of times if we are in discount pricing, Asian session will want to get the best price, and so they might push price higher to get a better sell. And so in this case, that's exactly what happens, and this happens quite often, more often than not. And so, this is the same kind of what we're looking for here. Price then ends up coming to that very extreme, tapping, and giving us that indication for sells. And so now what am I looking for? Okay, well, if this extreme holds, that means that the low that created it, which is this one, is going to be weak. So the way that I see this is this low took the high but failed to close above. So this is weak in itself. Price pulled back, held a demand, created a reaction to push price to the upper 70-80% of that swing, tap the extreme. If this fails to break, then that also means that this is weak. So now we have liquidity, we have structural inducement, this one, because this one took the high, and so this is considered strong, so this is easy to target. And then we also have this level here, which is the very easiest one to target because this has no inducement for the actual 15-minute zone here, as you can see. And if this fails to break that high, then at the very minimum we can sweep this and maybe still tap into this. And so my idea is following something like this and then targeting those lows. That's the exact setup that we see right above here. So let's go ahead and start looking. So once again, this is the 15-minute that swept the lows before taking the high. So valid to look for longs here. Price did come in, tap, generated that push to the upside, which would have been a nice long. I'm going to go ahead and look at the 5-minute because I use the 5-minute a lot of the time when I'm trading Asian session. So here we can go ahead and refine things a little bit more clean to show you our actual entry. So at the extreme, what I see here is that this wick, for example, from this high to the high of this wick, this is the area that is basically untapped. So this area is new pricing, meaning that above the previous high, this area has not been tapped. So I would very likely like to look for price to maybe come in because this now is a liquidity POI that is valid. At the same time, once this was basically created, you can see we have an inside bar, and that inside bar directly gets engulfed. So it's a 5-minute buy to sell engulfing that directly changes 5-minute character. So here we had this 5-minute internal high, we pull back and we make this higher high that sweeps the previous high. Immediately we have that inside bar that ends up getting engulfed, and we break and change character with a break of structure on the 5-minute. High probability range, if you've watched my supply and demand video, this is a very strong zone to look for. And so in my case, the extreme is going to be the likelihood, it's going to be the most accurate place to look for an entry, considering that it's the last place and the place where we have commitment that's at the extreme that is responsible for creating that break. We don't have any other buy candles anywhere here. We do have this reaction here, but we do have the first engulfing and the imbalance to be filled here. So I'm looking for this zone to be tapped. So once we have Asian session open, I come down to set up the computer. Here we have these equal highs that we liquidated, right? And so if we were looking for a 5-minute change of character, probably the first one we could have looked for would have been one here, and then this would have been taken. We could have gotten an entry here, but we had, let's see, that's where we had our entry, just a little bit above that zone. So what we do here is we look on the 1-minute time frame, and let's go ahead and work through these entries. So I'm going to turn on my 1-minute setups here in a second. But what I'm basically looking for is whenever a 5-minute POI is tapped, especially being at an extreme, I can trust it a lot more. Because it's basically, if I'm wrong at an extreme, that means I'm more than likely wrong on the direction, versus if it's a decisional flip, I can be wrong one more time before I get to the extreme. So in this case, here's what I'm looking for. The move that pushed price into the actual 5-minute swing is this one. So here we have, let's use this tool here. We have this high, we pull back, we take liquidity. This low makes that high. So this is the high. There we go. Price then pulls back and is respecting that demand. So this demand here is holding, right? This demand generates that reaction, makes a new high. But here's what we notice. This is not made with a candle body closure. So once you see those wicks closing above, we know that we've swept the high. Usually we like to trade away from sweeps. So in this case, this was something that was pretty aggressive, and more than anything what I was looking for was, I was thinking ahead. If this high is going to show us that we swept the previous one, that means that this demand, we've already generated a reaction that took that high. While this is considered strong, it failed to close above. So more than likely the minimum expectation is that this low is going to go. So let's continue this. Before we even have a 1-minute change of character, I can be confident being that we are at a 15-minute extreme, at a 5-minute refined POI. We come deep into the actual point of interest. We're not just tapping it lightly. We're past the 50% here, right? and we swept the previous high, we can have a pretty good bet that more than likely this is going to create an entry for a short. So I go ahead and I hit the button for shorts. Now, of course, I have the screenshot here. So here we can look at the timestamp. These are all TradingView screenshots. So here you can see the time, my time zone, 16:13. Here was the first screenshot. So price came in, swept that high, marked it as a sweep before I had anything else, hit entry, and I used a 3-pip stop loss because during Asian session, spread does widen, right? So this is exactly where I had my first entry. And then you can see that what ended up happening is that we do have a change of character. So 1 minute, this low is strong, took the high, and then now we take that low. So now price is showing some sort of commitment. So now we have this low, and at this moment what I'm noticing, let me turn off the Asian session and kind of make it a little bit more clean. We have basically some trend line liquidity that we can see here. We have all these highs in here. Well, we have 1, 2, 3, 4, 5, 6 highs that we liquidated to push into the 5-minute POI, right? And then we have what looks like trend line liquidity here. So we have 1, 2, 3. This is a demand chain that was forming. Price then comes back in, taps here, which is basically where we created the breakout of this to take out these liquidation of these highs, and we've generated that reaction. What I was looking for, here we can see how I monitored my trade, managed it. I'm looking at 15-minute, 5-minute, and 15-second. So what I notice is we've left behind a POI, and this is 1 minute time frame. We've left behind an inside bar, 2 inside bars, and then here we have the buy to sell that gets engulfed directly. So I'm looking for price to probably come back to mitigate my entry. So we break that 1 minute, and I'm not going to set it to break even. We're not there yet, right? But we give a 1 minute change of character. And so the high that I'm focusing on is from this high to this low. Price could come to the equilibrium of this high to this low, and that would probably be a little bit higher than this. But this would be the entry zone that I'm looking for. So price comes in, retests the POI, and then shows what? Rejection. So that's holding, right? So we're going to go ahead and go to the next screenshot because now we're playing by screenshots. Mitigation of POI created from the entry. Awesome. So now we have what? The next step. Now we've left behind a new POI, right? So here we have buy to sell engulfing. Now technically speaking, if we look here, this wick high, we have an inside bar. So the swing in my case would be from this low to this high. Anywhere we could come into here. At the same time, here we have this sell to buy. We have a doji candle in here, and that's what gets engulfed as well. So I'm drawing my 50% from this high to this low of that same doji candle on the 1 minute time frame. Price comes back in, mitigates that, and taps. You can see the wicks basically show respect, and so now what's my next move? My stop loss is now adjusted, where in Asian session spread regularly shifts from 0.3 to 0.8. Unfortunately, with my broker, and I do have an ECN trading account, so it's I do have pretty good spreads typically, but more than the volatility of lately has been pretty bad, right? So now what I have marked my trend line liquidity that I'm expecting to go. So I would expect these lows to go, minimum. I have that sweep that just occurred. We have our entry that was pretty aggressive before we even have a 1 minute change of character, just because everything makes sense here. We swept. We came back to retest, created a flip, and as that flip was generating, we got our entry. We no longer needed to cover 3 pips. I adjusted to 2 pips because all I needed to cover was now these highs. Now, unfortunately, the more times we tap a POI, the more liquidity we have sitting there. So now we have this POI, we have another tap, and we have another tap. So now we have 3 taps, 4 taps to this zone. So very likely I do expect price could even at this moment just wick up above and sweep that liquidity. So I don't want to be in if my original POI gets swept. So in that case I can adjust my stop loss from 3 pips to 2 pips. So that's about a 33% reduction in risk for me trading at 2% risk per trade, right? My next stop on what I'm doing here, okay? So what I'm looking for now is I have my 1 minute change of character. We're creating a range here. I can delete my mitigation and mitigations now to clean up my chart. and I now have this supply zone in general. This is the area we got tapped many times, and it's basically originating from my entry zone, right? And so here we can kind of see that this is the actual, I guess you would call it a resistance level, right? So price doesn't always come to a clean zone. It will come to a level, in this case like this area here, that it was strong resistance. What I'm looking for now is a break of that 1 minute structure. So here you can see that this was a new low, so higher high, but we made a lower low. So if we pull back, then I would expect this high to be respected and this low to go. You can see that we do have that 1 minute break of structure. The moment we have that break of structure, I was able to leave my house. Kind of like I said, that's why I don't film my video while I'm doing this live. I went for a long walk with my dog, right? Now, here's something that's important to know. I don't like to use break-evens very often, and I have a strategy for them. I usually don't break even until I have my second break of structure, because I would much rather have a loss than to get a break even from a retest and then end up with no R, right? So in my case, if I had break even set, probably because of spread, I may have gone tapped, right? Now in this case, I did not, because I kept my 2 pip stop loss. I reduced my stop loss, instead of setting to break even, right? So we break 1 minute structure, and here you can kind of see prices acting a little volatile here. It's trying to figure out what's going on, but we have this strong resistance zone here, right? That's generated from our actual entry POI. You can see price comes back to retest, and it comes just shy. Probably would have tapped the entry based on spread, but it didn't, so I'm okay. Stop loss. So it retested. Now we have a liquidity POI. And so now what we've generated is this buy to sell that breaks structure and creates a new 1 minute. Now that that happens, I can be comfortable setting this to break even. And the reason why is because now we have our second break of 1 minute structure, and this one specifically is a result of a liquidation, right? So this was the liquidation here that you can see. So now I take the low and the high of that range that before it broke, and I want to see, because usually price will come back on the 1 minute to retest these zones. So I said price may come back to mitigate this POI. Here's my next screenshot. I already set my stuff to break even, because here we have that second 1 minute break of structure and that took liquidity, right? So break even set after this. So at this point I'm risk free, and this trade is about, let's see, where would it be at this time? 17:10, 16:10. It'd be about 1 hour from entry, right? And sometimes Asian session can be very slow. So anyways, I'm looking for a retest of this zone. Here you can go ahead and see this chart. So now I've adjusted my take profits. So this is my first entry, and now my target is adjusted to liquidation of this weak low, because now I'm expecting, because on the 15-minute chart that you see here, we have a 15-minute change of character, 15-minute internal change of character. After we take that sweep of that 15-minute high, I'm expecting this to be the minimum expectation to go. So that's my new target, right? Here you can kind of see the different time frames. Now here's my next play. What am I looking for? So at this moment we have a somewhat mitigated POI, which is the one that I was showing you here. So this area here was the 1 minute range that broke, right? Now at that moment, if we go back here, it's somewhat mitigated, and then now we've created this basically this shooting star that looks like it's engulfing to the downside. So my note here says it's a new supply to mitigate if commitment occurs and the lows break. So if this directly is responsible for breaking this new low, then this will be a supply. Otherwise, I can expect this to be liquidity for the POI above, because we still have not come into well-priced 50% of that POI, so it's still valid. So what ends up happening, here's my next screenshot you can see. So I see that this was the area that I was drawing, and it fails to break that 1 minute. So that tells me now the supply range is not confirmed strong, as it has failed to break the lowest low yet. So now at that moment, what do I see? This can now be used as liquidity for the POI above that is not fully mitigated. So now we have inducement, and this is structural inducement, as internally here this took one low, two lows, three lows, four lows without breaking. So this is going to be very strong inducement for the 50% zone here, right? So here's my next markup. 50% of liquidity POI range is tapped. So now I'm looking for seconds entry. So if we look to the bottom right screen here, now you can see what I'm looking for. So on the 15-second time frame, I see here that we have a sweep. So I'm comfortable at this moment because I have this shift in order flow that I can take an entry here. Now on the 15-second, you can see that the 15-second and the 1 minute swing is the same here. So from this low to this high. So I'm not going to get a 15-second change of character or a 1 minute change of character until that low goes. So this would be aggressive, but this is based on the same thing that we swept the previous high. This was a sweep POI, so very likely price could come back in to mitigate that, right? So let's follow up with the next, whoops, go back here. There we go. What do we have looking here? We do not have, whoops, sorry about that. Here we go. All right, so no tap, so no entry there. This would have been inducement. What we then see is we generated this liquidity and price then sold off to the downside. Awesome, so we no secondary entry there. You can kind of see how this looks like. Now at this moment, this is kind of where we are in that chart, right? So we have yet to break the 1 minute structure, the lowest low. Price takes that high, mitigates the 50%, sells to the downside. We now have two zones where we can look for price. We have a flip and we have the extreme inside bar. Extreme inside bars for some reason just happen to work a lot better. I've noticed that they get mitigated more often on the lower time frames. In this case, that's the one that worked. So let's go back and show you what I was thinking, right? So we now have this zone, but obviously I'm not setting an entry there because this could also be inducement for the extreme. So let me show you what I did. Now we have that break on the 1 minute. So now 1 minute changes character bearish. So 1 minute structure is bearish because this is a structural high that broke that low. This is the new structural low, right? This is now showing us that we've created a lower high and the expectation is a lower low. Now in this case, we did not break the structural low yet, but what am I looking for? 1 minute returns bearish from the 50%. So that validates and that shows us that this is a valid mitigation. We did not tap the extreme 1 minute, but we tapped the 50% of that liquidity POI, that sponsored candle that's on a different time frame. And now what I'm looking for is what? Potential entry. So I have this zone here that created no reaction to this. Price just blew through. And then I'm looking here for this extreme. So this is the place where I got my second entry. This is the second entry, and this was a 15-second entry. So I'm going to show you on this one. So now what we have here is this is the extreme. Price taps into the extreme. Bottom right corner here, you can kind of see what I was looking at. This low, this high. So this one fails to tap. This low then makes a higher high, liquidates that previous higher high, and shifts. 15-second change of character. Now, immediately what I'm looking for is an entry. If this is going to hold, where can I get my entry? And I do not have a clean 15-second engulfing candle. I can say that this got engulfed, right? The wicks, right? But I can also say here is a pause, and this is where commitment was generated, but I can also say there's a flip here. So when I don't know or I don't have a clean POI, what I do is I take the 50% of the range. So this is the low to the high, and that's where I draw my range from. Then we break. Here we have a 15-second change of character. I now have my supply. This was a tap to the bottom of the range. That is not a valid entry for me. That now shows that that's inducement. So my valid scale in is going to be here. Now, of course, once again, you can see the timestamps right here. Obviously, this you can't fake timestamps on TradingView. I don't know how you would do that. So this would be the scale in that's valid. So now let's go to the next one. Price continues to push lower, and then what do we have? Price does come into our zone. Now in this case, this is a very small zone. We're targeting the 50% of this area here. All you need for this is a 1.5 pip stop loss. So if we go here on the 15-second, let's see. 15-second time frame. For some reason, bar replay is not working. Let me see. Bar replay. Not sure. Okay, well, we have it here anyway. So, anyways, price taps. Valid entry scale in. That would trigger us in. So that's in. And here you can see, look at this. Price then just starts melting away. So now we have one tap. We have two taps. Price is kind of building in here. If you were looking for another confirmation, you could have gone one in here on a 5-second time frame. But let me tell you why this makes sense. So here, what do we have? We have a 1 minute buy to sell liquidity POI sponsored candle on a different time frame. This is the range, right? This broke structure to the downside. Price then comes in to that 50% of that range, generates what? A 1 minute internal change of character. So the 1 minute's bearish structurally. The 1 minute order flow is bearish structure or bearish order flow, right? Price comes into the extreme, does what? 15-second change of character, right? From the extreme, price then comes in, taps the entry at the 50%, and what? Continues. Because what do we have? That is already a double confirmation. 1 minute structure is bearish, 1 minute order flow is bearish, 15-second structure and order flow is bearish, and entering at an extreme, you're very unlikely to be wrong unless the direction is wrong. So that's a 1.5 stop loss, pip stop loss entry that more than covers the high. I think you needed only 1.2 or 1.3 pip stop loss, which obviously is not going to work with spread. So 1.5 is more generous and gives you enough space, right? Next one. So that's where you enter from. Here we go. Order flow here, this low to this high. This low fails to make a new high, and that shows us what? Order flow is shifting bearish internally, and we can expect a failure. We get a flip, and then price starts to melt away. And so now we have entry one, right? This was a little bit aggressive, as you know, we didn't have a change of character yet, but we saw a sweep of the high in a 5-minute well-priced POI at an extreme. We took that entry. That makes sense. 3 pip stop loss, right? We have 2 structural breaks on the 1 minute time frame, and we have 1 minute change of character, 15-second confirmation at the extreme, retap of that. Here we have the secondary entry, 1.5 pip stop loss. So the difference between having a 10-hour day and a 30-hour day or whatever is simply a better quality scale in. At the end of the day, usually your first entry is not going to be as tight as your secondary entries are going to be, because the POIs get a lot more clean as price develops, right? But thinking about it like this, would I have taken this trade if I didn't have this first one? Maybe, right? But if I didn't have this first one, I could still probably expect that maybe this is going to come back to get tapped, or maybe price will come up a little bit higher. So once this one's set to break even and you're risk free, you can be comfortable taking a secondary entry because you're already going to be in profit, right? And then what do we have? From this zone, we get our entry right here. Price then breaks and creates new 1 minute break of structure, right? So we have entry 1, we have entry 2. What is our take profit? It's the liquidation of this weak low, because we remember we have this high that makes this low, right? This is a higher low, right? This low fails to make a higher high. So failure to make that higher high shows weakness here. This has no inducement, so this will be swept at the very minimum expectation. Here we have the last update. So we have entry 1 with 3 pip stop loss, targeting 45 plus pips, 15.2R. And then we have the secondary entry, which was absolutely beautiful at half the stop loss size at a 27R. And obviously price continued to melt, and I was expecting price to go where? To my 4-hour zone below, down here. Now, hasn't been tapped yet, so I mean, but that obviously that's kind of what we're looking for, and more than likely this zone will get tapped. So just keeping in mind that that's kind of how we're looking at price. So we have to have a higher time frame bias and understanding of what's happening on the 4-hour, what's happening on the 15-minute, and obviously we don't want to be overly aggressive without understanding what is the likely scenario to occur. In this case, for example, we had a tap at the 4-hour, just at the bottom of that range. It's very tight, but what we see is some weakness. We've already taken a strong low from here, right? Because this made a high. We took that strong low, so we're already showing some signs of weakness. When we take this high, we fail to close above it, so that's another sign of weakness. Failure to close above that high shows weakness of this original low, right? Price does give a tap, but this tap, dies off at that extreme, and so that's a pretty good sign that more than likely we are beginning to shift bearish, even when we saw how aggressive the 4-hour was, right? And very likely price was coming back to to come back to rebalance and mitigate the 4-hour, fill some imbalance. Had these trades lasted and I held them down to here, instead of being a 42-hour Asian session, very easily, let's just say here, if these hit, this would be 36R and 69R, all through Asian session. So you can see how important it is to understand what's happening during Asian session. Once again, to close off with my tips, be aware of where price is on Asian session open. If price is in premium, usually Asian session will begin to drive price lower because it wants to get a better price. Whether it's pro trend or counter trend, whatever, usually price on Asian session will begin to create some sort of pullback based on where you are in pricing. If Asian session opens a discount, usually it's going to run price a little bit higher because it wants to get a better pricing. In this case, Asian session set the high of that day, and you can see London and New York began and continued the sell-offs with very strong aggression. But at the very minimum, we targeted based on 15-minute targets. We had a 1-minute entry criteria that made sense, and we had 2 scale-ins plus probably a couple more that could have been captured during London session. I went to sleep just before Frankfurt session, so I wasn't even there for the TP. So I came back for the charts in the morning, and I see this. TP's hit. We had a nice day. 42R Asian session. Let me know if you have any questions. Hopefully you enjoyed this video. Once again, the screenshots of my entries and my explanations and my management, all of these are going to be linked in the description if you want to see them. I'll put the sharing, the interactive chart of this, so you can click on it and you can see it. And if you want to join the Forever Free Discord, go ahead and join. Links in the description. I hope you guys have an awesome week and enjoy the rest of your day. See you guys next time.